Good afternoon, everyone. I'd like to welcome you all to our Lunch and Learn webinar. This is the third in our series of these webinars. Today, I'm joined by Sean Pickett, who is Head of Business Development at Icon Accounting. He's going to talk all things entrepreneurial relief. I said it without making a mistake.
It is a tongue twister.
It is a wee bit of a tongue twister, isn't it? Yeah. So I'd like to welcome you all and thank you for joining us. I hope today's presentation, you're going to get all of the information that you need. In today's world, the independent professional, you might as well try and get every few bob you can. We're certainly working hard enough and paying enough tax, so you might as well get all the benefits you can. We would encourage you all to ask questions. There's a Q&A button down at the end of your screen there, so pop up your questions throughout the presentation. Don't wait until the end, because we will do the Q&A at the end. We'll do our best. Well, not we, Sean's going to do his best to answer all of your questions. So without further ado, I'll hand you over to Sean and his expert knowledge. Thanks, Sean.
The intros are getting better and better each week, Gillian.
I don't know if I can live up to them. I'm working really hard.
I don't know if I can live up to them, but I'll do my very best. And it's a joint effort. It's absolutely a joint effort. I wouldn't be able to do it, obviously, without you. And very, very grateful that you guys have welcomed me back, obviously, for the third episode. So just to make sure, Gillian, you can see my screen there, because if you can see it, everyone else can. Perfect. Much appreciated. Again, guys, I'm going to give you my direct details. If there's any queries or I suppose questions that we don't cover, or if I suppose more kind of particular circumstances pop up through the Q&A, anytime feel free to reach out. And again, obviously, you can contact any of the team at Berkeley and they'll do their utmost to obviously advise and assist wherever possible too. So just to give you a bit of an agenda as to what we're going to look at today. So first and foremost, what is entrepreneurial relief? The second thing then is the caveats to be aware of if you are considering, I suppose, looking at entrepreneurial relief a little bit more, I suppose, in depth. What does it look like? And more importantly, show me the figures, which is going to be, again, very interesting. What is the retirement relief, which is, I suppose, another relief that's available, quite similar to entrepreneurial relief, but there's a couple of different circumstances and we'll go through them as well. A couple of caveats as well, obviously, in terms of what to be aware of with regards to retirement relief, a summary, and then we're going to, again, look at some questions, hopefully. But again, like Gillian touched on there, don't feel like you have to wait until the end of the presentation or anything. Feel free to use the Q&A function throughout the presentation and we'll make sure that we answer as many of the questions as we physically can. So first and foremost, what is entrepreneurial relief? A very revenue-like definition. But essentially, it's a capital gains tax relief that was introduced first in 2014, and then it was basically revised and a new kind of concept came about in 2016. The relief itself gives a reduction in capital gains tax from 33% to 10% on the disposal of shares in a trading company. So this includes the liquidation of a company, and that's probably the most popular way that contractors and independent professionals in Ireland essentially take advantage of entrepreneurial relief is through disposing or liquidating of the company. There is a lifetime limit of €1 million on the gains that you can claim relief on. So that's really interesting, and that's something that we'll touch on a little bit later in the presentation once we get into the figures. But the biggest thing to take from this is, again, it's a great relief that you can take advantage of, and we're going to show you how, essentially. There are some caveats to be aware of, and I'm aware that obviously we might have some people on the webinar today who are operating through a umbrella limited company structure, which is absolutely fine. Unfortunately, you cannot claim entrepreneurial relief through that structure. And I suppose if you catch up on the Lunch and Learn 2 session, hopefully we'll be able to convince you as to why you should consider moving across to a personal limited company if you can see yourself contracting for the foreseeable future. But the first point I'll make is the relief is only available to personal limited company structures. So again, if you're in an umbrella, that's absolutely fine, but you won't be able to look at the entrepreneurial relief. There are other conditions also that need to be met. So the first of all is that you have to own greater than 5% of the share capital within the private limited company. The second thing is you're required to have the shares for a continuous period of 3 years out of the previous 5 years at the time of application. So does that mean you have to be a private limited company structure for 5 years? It doesn't. You can actually claim the relief after 3 years, but you have to be going for 3 years continuously as a minimum, and it's 5 years, I suppose, is the maximum. The individual must have spent a minimum of 50% of their time in the service of the company as a director or an employee. So you have to be basically contributing to the success of the company in order to, I suppose, claim the entrepreneurial relief. And again, you have to be a qualifying trade and business. So what is a qualifying trading business? A qualifying trade and business is, again, to be honest with you, it'll cover off the vast majority of businesses that are involved in the contracting world, and they would qualify as a trading business. An example, I suppose it's probably easier to provide an example that's actually not an example of a trading business. An example of a company that wouldn't qualify as a trading business is a business that's set up to manage investments such as property management, or a company used to solely invest in shares and different kind of, I suppose, financial markets such as. So what I would say to you is, if you are providing services, professional services, or if you're providing, again, if you're selling services, if you're selling goods, the vast majority of them businesses will qualify as a trading business. And that's something that I suppose quite important. If you're not a trading business, entrepreneurial relief shouldn't come into your mind, because it's not going to be something that's applicable to you. But again, the vast majority of contractors that utilize a private limited company structure would qualify as a trading business. So what does it look like? Like I say, there's many tax advantages to open up your private limited company. But again, with contracting and with the premium rates that are often associated with contract roles, the vast majority of people are going to be looking at some shape or form of the higher marginal rate of income tax, which is about 52%. And what that means is, essentially, once you surpass your tax band, again, if you're a single person in Ireland at the moment, that's obviously been increased recently, 36,800. But if you go past that, essentially the rate of tax that you're paying is going to be close to 52% on any income above that. Again, if you're looking at what entrepreneurial relief is, you're going to have a calculation here that doesn't look very, I suppose, aesthetically pleasing on the screen, I won't lie, but it will, I suppose, once we go into the table format and actually break down the figures for you. You're going to have capital gains tax at 10% rather than 33%. You're then going to have to take into account the corporation tax that you're going to basically save on these profits. And I'll go into more detail and I suppose a little bit more background on what profits I'm talking about in the next slide. But you'll also have a professional service surcharge, which again is about 15% of the undistributed profits in a company, which works out at about 6.56%. As well as that, you're going to have a liquidation fee. So just before I go on any further, what's the corporation tax, the 12.5%? Everyone, I suppose, at this stage probably has an understanding of what corporation tax is. But just to give you an idea again as to what we're actually kind of, I suppose, suggesting that we do in order to kind of gain from the relief essentially that's available to us from revenue. Most contractors that are in an umbrella company structure will have all of their payroll processed at the time that they receive the invoice, essentially. So once the invoice is paid from the client, again, 100% of that invoice is going to be processed to you as payroll. One of the main advantages that we touched on last week was, essentially, you don't necessarily have to process all of the income that you receive through your invoice as payroll if you utilize a private limited company structure, or what we know more commonly as a personal limited company structure. And the reason being is because you don't have to take 100% of the funds that you're invoicing. So again, for an example, if you're invoicing €8,000 a month, €400 a day at 20 days per month, you don't have to process €8,000 payroll. Instead, you can keep €2,000 back in the bank account, process €6,000 as payroll, reduce your income tax as a result of doing so, but also have €2,000 in your business bank account. So the €2,000 that we're keeping in the business bank account is where the corporation tax will come into. So corporation tax is not something that you come across as an umbrella company structure contractor, but it's something that you will come across as a private limited company contractor. The other side is the professional service surcharges. So again, it's about 15% of the half of the undistributed profits, and that equates to 6.56% of all the profits that you retain. So what we've done in the next slide again is giving you a case study. So we're actually going to show you some figures. In this scenario, we've given the contractor a €500 per day rate. They've got a 70,000 salary. They've also got €7,000 expenses. And as a result of these figures, they're essentially going to retain a profit of €35,000 each year. Now, what I would say before even moving on, if it's a case that your daily rate is €350, if it's a case that your daily rate is €300, that doesn't mean that entrepreneurial relief is not for you. It just means, again, that we'll do a more bespoke calculation for you. And even if it's not 35,000 each year that you're saving in profit, it doesn't have to be. There's no minimum level, essentially, that you need to, I suppose, put away in the business bank account to qualify for entrepreneurial relief. So just keep that in mind as well. So what do the figures actually look like? Okay, so we'll go through this in a kind of, again, a column by column basis. It's the easiest way to do it. First and foremost, based on the example that we provided, we are essentially going to have a profit of €38,000. So in that scenario, the €38,000 is going to be liable to corporation tax of 12.5%, which you can see underneath is, I suppose, applicable to €4,750. As well as that, we also have to take the professional service surcharge into account, which is going to work out at €2,493. As a result of paying the corporation tax and the professional surcharge, it means that after all of our taxes are paid, after we've saved €38,000 in the business bank account, we're now going to have a retained profit of €30,757 after year one. If we repeat that same cycle again in year two, again, the exact same thing will happen, only after, I suppose, we've paid our taxes in year two, we'll now have 61,514 available for distribution in the company. Now, an awful lot of people will ask the question, okay, what if I get offered a different opportunity, or what if I leave contracting at this stage? Again, there's other options available to you, but entrepreneurial relief would not be one of them. So if you were to leave contracting after saving, I suppose, 61,514 after year 2, entrepreneurial relief is not something you'll be able to consider if you don't continue trading for the 3rd year. However, if you do continue trading for the 3rd year, entrepreneurial relief will suddenly become available to you. So you have to be contracted for a minimum of 3 years to avail of entrepreneurial relief, or a maximum of 5 years. So again, just to go back through the same cycle, you're going to have the same amount of corporation tax and the same amount of professional service surcharge. You're going to have 92,000 after year 3. If you wanted to liquidate at this stage, like I touched on, you absolutely could, and we'll maybe look at a little example of that just after we finish the rest of the calculation that we've got on the screen. So after year 4, you're going to have 123,000. And after year 5, you're going to have a little bit more value in this year, because again, if you time the liquidation correctly, it'll be a case where you don't actually have to do the professional service surcharge. So again, on the example that we're providing on screen, after 5 years, you've got 156,279 in your business bank account, all the corporation tax is paid at this point. Now, how do I get that 156,000 out of the company and into my own personal name? So what you would do is essentially look at a liquidation. A liquidation typically costs, an average essentially cost for a liquidation is about €3,000. Again, someone might get one for €2,000. It could be €4,000, but €3,000 is a fair mark to kind of give it in terms of an average fee. After you've paid your liquidation, obviously you've got 156,279 minus your 3,000. That leaves you with 153,279 available for distribution. We then have to look at the capital gains tax. In a standard, I suppose, liquidation, you'd be looking at a capital gains tax of 33% if you sell business shares or assets. But based on the entrepreneurial relief and the revision of such, you would actually get that reduced to 10% capital gains tax. So 10% on 153,279 works out 15,328. That then leaves you with a net distribution. So when I say a net distribution, this is money physically coming into your personal bank account, transferred from the business bank account, of €137,951. So that money is essentially all yours now at this stage. It's not the company's. There's no grey area between us to whose money that is. That is your money as the entrepreneur essentially behind the private limited company. So that 137,951 is what you can get from a total income of 190,000 again when you take it into account over the profit that you've gained. So in terms of an effective rate of tax, you're looking at about 27%. So what I would also do just before we move on, and again, that 27% is a figure that we'll look at in more detail in the next couple of slides and compare it back to what your figures would have been if you had payrolled yourself this profit instead. But if you were to liquidate after 3 years, again, people, I suppose, and understandably so, it's very hard to kind of commit to anything that's longer than a couple of months now at this stage. But if it's a case that you're kind of thinking, well, 5 years is a little bit long, you can liquidate again, like I said, after 3 years. So just to do a very rough calculation in my head, again, if you were to liquidate here, you would have 89,272. Once you pay your capital gains tax at 10%, you're going to have about 8,900 of that. So you're going to bring it down to about 80,000 net distribution, and 80,000 net distribution over a total value of, again, if you look here, you're 76,104. So you're getting great tax relief essentially available. You'll get 80,000 into your pocket after 3 years of doing this exact kind of formula. So just to compare the working example back to what that would look like from an income tax perspective. So if you were to take the 38,000 as, again, that we had as profit in the business bank account and actually process that as salary throughout the 5 years or throughout the 3 years, the amount of tax that you're going to pay essentially as a result of that is €19,760 is going to be what you're going to be paying in tax per year on that 38,000 income. So you're going to receive 48% of it, and the revenue, unfortunately, is going to take 52%. So again, when you look at it over a 5 year aspect, you're paying €98,800 in tax, which again hurts me to even say out loud, to be honest. But it is a case that you are paying them taxes on an ongoing basis, and Entrepreneurial Relief can obviously give you an alternative solution as to how you can turn around and obviously reduce the amount of tax you're paying and increase your tax efficiency. So again, just to kind of put it back into perspective, the amount of tax that you'll pay under the capital gains tax on the Entrepreneurial Relief, taking into account your corporation tax, your professional service surcharge, you're going to pay €52,049 worth of tax. If you were to go the PAYE structure through your payroll as standard, you're going to pay €98,800 tax. So straight away, you're making a saving of €46,750, which is massive. So again, in terms of a percentage relief, you're looking at 52% versus 27%, you're looking at saving yourself 25% on tax. Now, what I would say before I go any further, essentially, and look at the other relief is there's a couple of important points to make. If you're considering entrepreneurial relief, the way entrepreneurial relief works, and I'll just go back to this slide, essentially is typically you would reduce your salary to turn around and obviously try and maximize the amount of profit that you can gain on a yearly basis. You should not be reducing your salary to a point where you are actually physically struggling financially, or it's starting to become stressful in terms of covering off your bills, your mortgage, etc. You should only be using entrepreneurial relief for the additional income that you can kind of, go without. So any additional income that you don't need on a monthly, and obviously then it kind of turns into a yearly basis, that's the income that should be considered for entrepreneurial relief. It's not a case that you should, put yourself through the depths of scrape and buy essentially for 3 years or 5 years in order to make entrepreneurial relief work. It's a case where entrepreneurial relief should work for you, not the other way around. Again, just to touch on something else before we move on, it does work differently if it's a case that you have business assets in place. And when I say business assets, I'm not talking about the likes of IT equipment, a laptop or a phone. I'm talking about the likes of property, company vehicles. In that scenario, your liquidation fee will be more expensive just because obviously there's more, than a standard liquidation required in that scenario. You need to make sure that you're obviously liquidating the company and getting rid of all the rest of the company assets as well. So just keep that in mind. And again, if anyone has any, bespoke questions or queries, hopefully we'll get them into the Q&A function and we can address them at the end. But it's definitely something that you should consider if you're going to be considering contracting for the next 3 to 5 years, getting your personal private limited company set up and maximizing your tax efficiency. This is one of the very best ways that you can achieve that. And it's one of the most popular reasons that our clients at Icon Accountant would make the switch from an umbrella company, director or POE into their own personal limited company. So to move on to the second relief essentially that's available from revenue is retirement relief, and it does work slightly differently. Again, it's a capital gains tax relief when disposing of any part of your business. Although it's referred to as retirement relief, you do not need to retire from the business to qualify. You do essentially have to be 55 or older. But again, there's also a couple of different moving caveats on that, and we'll touch on them in the next slide as well. There are 2 different types of retirement relief also. So if you're disposing of your business to your child or to someone outside of the family, and typically the maximum value is 750,000. So the lifetime limit is 750,000 in this scenario. However, this can be reduced in certain circumstances, and we're going to touch on them now. So it will only apply again to your own personal limited company. It's not something that's going to be available to you if you're utilizing an umbrella structure. And there are other conditions, like I say, that also need to be considered. So you have to be a minimum of 55 years of age. If you are 66 plus, so if you're over the age of 65, essentially the maximum lifetime value that you can take from retirement relief is 500,000. So the maximum relief you can actually get is on 500,000. The next caveat to be aware of is that you must own 25% of the voting rights, or 10% if if family members own at least 75% in that scenario. So if it's a family business, if there's more than one person involved, you have to have essentially 10% as long as the family owns 75%. And again, if it's a case where it's just your own company, you'll have no issues with this whatsoever. Again, it has to be a trading company. 10 years ownership is required. So this one's a longer, tax planning mechanism. Essentially, it's something that you'll need to kind of plan longer for, and it does require discipline, obviously. But you have to be a working director for 10 years, 5 of which must be on a full-time basis. So again, something to keep in mind before you obviously put all of your eggs into that basket. The tax, advantage on this one, again, slightly different, and we're going to use a different 10-year case study in this scenario. But you're looking at a marginal rate of income tax 52%, capital gains tax, corporation tax of 12.5%, your professional service surcharge and your liquidation fee. And in this scenario, we're going to move into the 10-year case study because, again, I don't want to explain them and overcomplicate things for anyone that's watching. So again, similar scenario, you've got €38,000 profit each year, you've got your corporation tax of 12.5%, and you've also got your professional service surcharge based on that. Again, you've got your retained profit of 30,758, but in this slide, you can see obviously we've got 10 years in total. So again, if you're going to be doing this for 10 years, if you're going to see yourself contracting for 10 years, this is what it will look like. So after year 10, you will have a total of €310,072 essentially built up as retained profit in your business bank account. And again, as a result of that, you're going to be able to liquidate the company for €3,000. You don't pay capital gains tax. So again, in terms of your 0% capital gains tax, it means that you've got your full €3,007 available, essentially 307,000, available for distribution once you have gone through the entrepreneurial relief process. And in terms of what that looks like over the total amount of income that you would have saved, you've got 380,000 in total. You're going to get 307 of that into your pocket, so personally into your pocket, not into the company. And that gives you an effective rate of tax of approximately 19%. So again, something to consider if it's a case that you can see yourself contracting long term, just to do the same as we done in the last, I suppose, entrepreneurial relief example. We're going to compare that back as to what that would look like from an income tax and a salary perspective. If you were to take that 38,000 over the course of the 10 years as salary, you're going to pay income tax to the value of €197,600, which is a marginal rate of tax of 52%. If you go under retirement relief, the total amount of tax that you're going to pay would be 72,928. And again, if you compare that back, you're making a saving of 124,672. So again, some big figures there, obviously some big savings if it is going to be something that can be, I suppose, something that you can see yourself doing. If you're going to be contracting for the long term, definitely something to have a conversation with your advisor on, whether that's an icon accountant or with your own personal service provider, whether that's a local accountant, whoever it may be. If it's a case that you can see yourself contracting for a long period of time, and I would call a long period of time 3 years, anything above that, essentially, you should at least be having the conversation with your provider as to what entrepreneurial relief or even what retirement relief can do for you. Again, entrepreneurial relief is definitely more popular, and that, I suppose, is quite understandable given the fact that the retirement relief requires you to be in it for 10 years, whereas obviously from an entrepreneurial relief perspective, you can go from a minimum of 3 years. So again, in terms of summarising my top 3 tips from both entrepreneurial relief and retirement relief, if you aren't sure, speak to your provider and they can advise on your scenario. One of the tips that I gave when we were on the retirement relief slides was, it shouldn't be a case that you're working for entrepreneurial relief. It should be a case that entrepreneurial relief is working for you. So again, make sure that you're not cutting yourself too tight in terms of the salary to try and, again, maximize the amount of money that you're leaving in the business bank account. Instead, make sure that it works. Make sure it's a case that you're not leaving yourself under financial stress or pressure. Life is tough enough without doing any of that stuff. It does require discipline, but you shouldn't be struggling as a result. So I've just touched on that one. And again, you can reach out to your accountant or provider to put a plan in place that's going to be bespoke to your scenario. So not everyone is in the same position, obviously. Some people will turn around and use entrepreneurial relief to turn around and make a bulk payment off of their mortgage. If it's the case that they've got a balance left on their mortgage, they'll try and use and utilize entrepreneurial relief to get as much money out of the company as they can in a tax efficient manner and make a once-off payment essentially to try and clear the mortgage maybe. Other people look at it as a holiday home potentially. You know, if it's a case that you've paid your mortgage, you're still contracting, you've got additional income essentially that you can put to better use. Entrepreneurial relief is a great way to maximize that. It means that you can get that 27% effective rate of tax and basically hopefully buy yourself a nice little place in the sun. But again, I'm hoping that we've got a couple of questions slightly quicker today. And I suppose the reason being is there's very little room for grey area in the entrepreneurial relief or retirement relief subject. And that's because I suppose it's so stringent from revenue, but definitely a massive tax saving available and something I would recommend everyone to at least consider if it's a case that they can see themselves contracting for that period of time.
Sean, thanks a million as always. Loads of information there for absolutely everybody. We've loads, which means people are paying attention. Good for us. We're doing good. So the first question that we have in there, sorry now for being a wee bit slow because I'm trying to read these as I'm going, is from Kieran. He wants to know, does liquidation mean that the company is completely wound up, i.e. would one have to start a new company after liquidation?
Fantastic question. And it's something I actually meant to touch on the slide. So thank you very much, Kieran. If it's a case that you can see yourself contracting past the actual date that you're going to be contracting for 3 years, let's say. So if it's a case that you're looking at entrepreneurial relief and thinking this is something I can do, you should essentially try and leave yourself a gap before you start a new company. So despite the fact that there's a lifetime limit of €1 million, that means you can go back and absolutely claim entrepreneurial relief again. However, I would always suggest if there's going to be a break in your contract or if you're going to basically be on holiday for a month, that's a great time to kind of try and plan entrepreneurial relief around. Again, revenue will have no issue with you turning around and making a return to contracting. But what I would say is that they might be a little bit, let's say, upset if it's a case that you're closing your company on Monday, but you're trying to open a new company on Tuesday. So what I would say is leave a bit of a gap. It doesn't have to be any specific period of time. Again, it could be a case where you're turning around and basically providing the argument that, oh, well, I was going to start a new role. That role fell through, so I returned to contracting. There's absolutely no problem whatsoever with that. But it's just about, again, applying a little bit of, I suppose, practicality and realism to it. I would suggest making sure that you leave the liquidation to a time where you're going to take a little break for yourself. You'll deserve it after all that discipline for 3 years as well.
Brilliant. Thanks, John. Now, our next question is from Robert. Can I set up a new company immediately after liquidating my company to avail of entrepreneurial relief?
So you can set up a new company. Again, I would recommend essentially not doing it immediately, whether that's a 2-week, 3-week, 4-week holiday, even like I say, or even if it's a case where, look, you can utilize a different structure, or you can essentially look at a different option for that period of time. There is always a workaround in place, is what I would say to you. But I would advise leaving at least a 3-week, 4-week gap before you start the next company incorporation process. But there's nothing preventing you from opening another company after you liquidate one for entrepreneurial relief. So it's definitely an option. It's just about doing it at the right time.
Okay, fantastic. Now, another question from Rob. Does this affect your ability to contribute to your pension?
Well, again, I suppose it can. It would be a conversation that I would definitely have with a wealth management advisor to make sure that you're basically utilising the maximum from your, I suppose, undistributed pot, if you like. And what I mean by that is a lot of people will use an executive pension contribution to basically reduce their corporation tax liability on a yearly basis. So, for example, in that scenario that we had on the screen where you had retained profits each year of 38,000, what some people will do is they will basically try and put, let's say, 18,000 euro as a once-off payment into their executive pension to reduce the amount of corporation tax that they're going to pay. But what I would definitely suggest in that scenario is, if it's the case that you're currently contributing to a pension, it's not to say that you can't continue contributing to your pension when you're looking to maximise entrepreneurial relief or utilise entrepreneurial relief, but it's definitely a conversation you should have with your accountant just to make sure that you're doing the most, again, tax efficient option for you. I wouldn't recommend not contributing to a pension to just solely focus on entrepreneurial relief. I would say that there's a nice medium balance between the two. But again, on a kind of case-by-case basis, to be 100% honest, Gillian, in that scenario.
Okay, brilliant. Our next question is from Robert. How is the effective professional services surcharge of 6.56%? I expected it to be 7.5%, 15% of 50% undistributed profit. I hope I have read that question correctly and that you understand what I'm trying to say.
I did. And to be fair, it is a difficult one to get your head around, essentially, because you're saying it's 15% of all of the undistributed profits. So, and it's half of that, so it should be 7.5%. But the way the calculation actually works out, it's 6.56% essentially of all the undistributed profits. And again, I can reach out with a little bit more information on that afterwards. It's a little bit complicated and complex to try and explain without having a graph in front of me, to be 100% honest. But I absolutely can provide more information on that as to how it kind of calculates at the 6.56% of all undistributed profits.
Okay, brilliant. So you don't need a degree in maths, so to figure it out.
Physics, actually, Gillian.
Physics, really. Now, we have another question here, and I'm not sure if are both relief options better than a pension plan?
Again, I suppose there'd be arguments for and against both, to be honest. What I would say about a pension is that if you're contributing to a pension for 2 years and you've got to the point where now, for whatever reason it may be, whether you're moving away from contract and you're moving into a permanent opportunity, whatever the case may be, if you've saved for 2 years, essentially, it can become now a case of, okay, well, I was saving for entrepreneurial relief. I can't obviously continue with the entrepreneurial relief because I'm going to be working in permanent employment. In that scenario, I would say, okay, well, an executive pension is definitely going to be very useful for that person. And the reason I would say that is, how else are you going to get the 68,000 or the 66,000 that you've stored in the business bank account across to yourself without becoming, I suppose, the opposite of tax efficient in terms of taxing yourself too much on an income basis? There are definitely ways you can do it. But what I would say is, if you were to speak to a pension advisor, they'd turn around and tell you the pension is the best option. If you were to speak to an accountant, they might turn around and say, no, well, again, I wouldn't advise you not to have a pension, but I would definitely look at any additional income that can be utilised in an entrepreneurial relief. So again, the fine balance, I suppose, of having both would be ideal. If it's a case where you can't utilise both and you're looking at which one you should do, I would say get in touch with your accountant, get in touch with your wealth management partner, and they'll be able to advise you based on your scenario. Essentially, do calculations as well. They shouldn't just be speaking to you and telling you, oh, well, this is better for you. Make them show you why it's better for you. Make them do out the actual calculations and provide you the calculations as to what it's going to look like for you at the end of your tenure. So definitely reach out, I suppose, to your provider on that one, and they'll be able to definitely advise based on, again, what your, I suppose, disposable income is on a monthly basis. But if you can get both, definitely utilise both.
Yeah, make them work for their fee that they're charging you. Why not? Like, get them to do a wee bit of work for you.
Yeah, and make sure you ask for the calculations. 100% always ask for the calculations. Don't just let them tell you this is what's going to be best. My top tip would be always ask for the calculations and make them show you.
Yeah, make sure that they did do the work for you. I just have one or two more questions. I have a question here from John. He has a company vehicle, and will this have any impact on the liquidation process?
It will, and it won't. Don't get me wrong. It's not a deal breaker. Essentially, it's not going to cause much hassle. But the one thing I suppose when you are liquidating a company is essentially what you're doing is winding up the company. So if your vehicle is owned by the company, that company vehicle now needs to be purchased by you as an individual or sold through the company essentially. So if you're not going to purchase the vehicle to own it in a private, I suppose, concept or in a private aspect, you need to sell that company vehicle essentially before you can close down the company. So the capital gains tax will apply on as normal essentially on the sale of that asset, but after the vehicle is sold, it's going to be a standard process fee essentially. So it's not something to put you off essentially. I would say that it's something to be aware of, but definitely not something that should put you off looking at the entrepreneur or retirement relief.
Okay, fantastic. And we just have one last question here now. It's this individual would like to purchase property through their PLC, and can they apply for entrepreneurial relief after the purchase of the property?
Okay, they can. They absolutely can. But what I would say is I would switch the mindset as to should I use entrepreneurial relief to try and purchase the property as an individual? And the reason I would say that is, again, if we go back to, I suppose, the non-qualifying business in an entrepreneurial relief conversation is the likes of investment income. So if you're not trading, if it's not a physical trading company, that income that you derive as a result of your business property essentially is not going to be applicable to entrepreneurial relief. It's also going to have a higher corporation tax. So for example, if you're purchasing a investment property through your private limited company today, and you're looking at entrepreneurial relief in 3 or 5 years, any of the income you receive as part of that investment property is going to be taxed first and foremost at 25%. So that's the corporation tax that's going to increase firstly. The second thing then you have to realize as well is if that property is ever sold, you then have to look at the capital gains tax on a full 33% essentially before you can look at the entrepreneurial relief calculation. So what I would say is change the mindset, delay maybe purchasing the property abroad, which may be hard to hear, but use entrepreneurial relief to help you purchase that property.
An awful lot of people now.
But use the entrepreneurial relief to help you purchase the property is what I would say, if possible, is put your head down for 3 years, get all of your, like I say, disposable income into the entrepreneurial relief calculation and at least a conversation with your provider. And then at the end of your 3 years, hopefully you'll have a nice little villa either in Spain, France or wherever pleases you, I suppose.
Yeah. Listen, that was brilliant. Thanks to everybody for their questions. I hope you got all of the information that you wanted. Thanks again to Sean for his great presentation. It was really informative and I hope everybody got what they wanted out of it. As always, you'll be sent an email tomorrow with the link for this live recording. So if you want to go back and have a chat, again about everything, it's there available for you. We have our last lunch and learn session next week, which is all about why you make the switch. So on behalf of myself and all of Berkeley and Sean, thanks a million for tuning in, and try not to eat too many Easter eggs over the weekend, gang. All the best. Chat soon.